Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on my podcast, I have Leo Falkovsky. Leo has enjoyed being a real estate sales representative and mortgage broker for the last 31 years. He's always strived to be on the cutting edge of technology to enhance his clients' real estate and mortgage needs, but most of all, have always understood that the human element is what is the most important aspect of his clients' goals and needs when it comes to the selling of their house and the buying and financing of their home. Welcome to the podcast, Leo.
Thank you for having me, Harris. Pleasure.
You know what? I was going through your, I guess you could say your resume, your experience, and a lot of times my podcast has somebody who's either on the realtor end or on the mortgage broker end, and I think you're actually on both sides for the past 31 years. And that synergy there has to bring some kind of, I guess, depth and experience and understanding of the market in more than just kind of one dimension. But before I kind of jump into that, I just wanted to kind of dive into how you got into the industry and how did you kind of decide that you're going to be in both of the areas. And I know that you've been in it for 31 years. Is this something that you felt like, you know what, from the beginning of your career, like I need to get into real estate? Is it something that you fell into? Can you kind of give my listeners what it was, what's your story behind getting into real estate?
Yeah, sure. So actually, everything started on the banking side first. I got hired straight out of Seneca College. I was one of 31 management trainee select people. So I was hired in the Toronto division and started moving up the ranks. They would start you off as a teller for a couple of months and then a CSR, and then they introduce you to loans, then investments, and then you kind of pick which specialty you want to hone in on. And for me, mortgages just came natural. And from starting with the TD Bank back in, oh gosh, I'm going to date myself, 1994, 1995, I moved on to, if you recall, the first virtual bank, BMO M Banks, on the corner of Bay and Bloor. They were then competing with ING that was also virtual. And I was fortunate enough to work in the credit department, which would be the distribution center for all mortgage applications that mortgage brokers all across Canada would submit with the bank. So from then, it just natural progression. May of 2000, I went on my own and formed my own brokerage. And the real estate started much later, because on the mortgage side, I noticed I was working with a lot of real estate investors. And so even for myself, as a beginner investor, I wanted to learn more about the process. And I decided that I'd better be able I'd be better able to serve my clients by being duly licensed, um, and focus more on a boutique type approach rather than a transactional approach. And therefore, the type of client I service would be the one that would want to sell, buy, and mortgage with me, if that answers the question.
Yeah, no, that definitely does. But so I just kind of want to step back for a bit. You said that you're working at a bank and you're kind of in a management program and you've kind of stepped up the ranks. What made you decide going from a bank to then just starting your own brokerage? Was this an overnight decision? Was this something you had to think about? Because with banks, I mean, the assumption is that you're working for a reputable organization, and that you know what, there's job security. Moving towards brokerage, it's more self-employment. It's a totally different beast in a lot of ways. So, what kind of got you to move over to that brokerage side?
Sure, there was a step in between. So when I was working at the credit department at BMO, I naturally was introduced to mortgage brokers that were submitting applications to us. And when you take them out for lunch and you deal with them day in, day out, and you become friends with some of them, and you see what life could look like on the other side of the banking. It seemed enticing. I was like, really, you can stay in the warmth of your own home. This is pre-pandemic, so it was
Yeah.
rare for someone to be working from home, and it was just enticing. And I naturally loved placing underwriting mortgage applications, and I figured, hey, if I can do this on my own, um, all I all I need to do is beef up the sales side of it, which is the most important part, other than the technical side of the underwriting. And I was fortunate enough to get an in-house real estate position. So I was an in-house mortgage broker at the time. I believe it was Century 21. I then moved on to Sutton Group, and that's how I
Mm.
kind of started meeting and working with many real estate agents that would support my underwriting skills.
Yeah, you know what? Like whenever I have clients, anybody asking me whether, if they're looking for a mortgage, whether they should be going to a bank or a mortgage broker. I mean, my knee-jerk reaction, I always say go to a broker, and kind of for the same reason. Like one of the reasons is what you just kind of explained, in that I feel like when you're going to the bank for to renew your mortgage every 5 years, if the person helping you 5 years ago is good, they're gonna be gone. So like you're just kind of gone because you're really good at what you do. Whereas with a broker, if he's really good at what he does, or he or she, they're going to be there in the next 5 years, and you can actually go through your entire kind of life and your entire portfolio with the same person, and they evolve and understand your needs better than a bank. I don't have anything against banks, but just one of the limitations there is that anybody who's good is going to get promoted, and if they're still there in 5 years, you're going to question why they're still there.
Oh, 100%. And I can tell you, it wasn't an easy decision, going from a nice guaranteed salary at the time, and the baby number two was born, and it
Oh
was
yeah.
kind of a scary time. But I bet on the fact that, look, if 6 months of savings float would not suffice, then I can always go back. And I left on very good terms
Yeah.
with Bank of Montreal, where I left, and I said, look, if I go on the other side, and I could bring more value to the table by bringing mortgage applications back to you guys, then it's a win-win. If
Yeah.
not, will you take me back? Gladly they would. So it was a tough first 6 months, but um, after many networking events and connections, and just good old fashioned belly to belly service, um, the realtor base started growing, and referrals started um, going into quantum leap. And I'm fortunate now that I'm in probably my fourth or fifth 5 year renewal cycle, and I'm now
Uh,
servicing probably the children, in some cases, instances, grandchildren of the original clients that I've had the
uh,
pleasure to serve.
Oh wow, that's definitely an accomplishment. So, I guess turning back to that last comment that you made in the beginning, where you're kind of moving more towards a boutique experience, and in combination, and obviously it's been successful if you're going through your fourth or fifth cycle, and that you're kind of providing the expertise more on just investing and the financing and everything. Can you give us, like my listeners, a rundown of what it's like kind of working with you? Are you completely digital? Again, do you prefer meeting in person? What's kind of the process? If they are thinking of buying a house, buying that investment property, what should they be doing? Should they be emailing you, giving you a call? What's kind of that entire journey?
Yeah, so I personally still like to meet people face to face in person uh, anytime possible, especially when it comes to the sale or purchase of a residential um, property, because there's that emotional element, and there's an expression: the ego doesn't want to be heard; it wants to be held, kind of like an individual. They want to be handheld through this difficult emotional process in some instances. Especially if I'm selling somebody's family home where they've lived and raised children for the last 20 to 25 years, and they're transitioning, or they're a first-time home buyer excited about uh, starting the next chapter of their lives, starting a family. So I would always initiate a meeting face to face. However, on the mortgage side of things, I mean, I do what's convenient for the client, especially nowadays. Like, I just funded a mortgage for somebody that I literally haven't even heard her voice. It was a referral from a past client. Everything was done over email, text, WhatsApp. Um, I will
Wow.
pick up the phone at the end of transaction, just to hear the voice. I like to hear people's voice, but it goes to show you how far along we became technologically advanced. But at the same time, I feel like we're losing the human element if that's the case. So I do try to meet with people and at least chat with them, like we are today.
Yeah, I mean, the funny thing is I used to like people coming in and meeting them face to face for signing, and then when COVID happened, for law firms, they changed the law so you could sign digitally. And I think yesterday was my first walk-in client in the entire year, and when they came in, I
Oh
had to
wow.
readjust. I had to readjust to like do a signing in person because I'm so used to doing it online. And online, they're done, right? Like it's done in 5 minutes. Before there was a lot of small talk.
Oh,
You got to know the client. You actually understood them a little better. But as soon as like COVID happened and everybody's online, they're doing it during their lunch break or the kids are screaming in the background. So everybody's kind of in and out. Whereas this time, I just kind of sit there and we're doing some small talk, and I'm like readjusting to what it used to be like.
it's weird. I hear you. I know.
Yeah,
and
definitely.
I do have an office outside. Like, I'm in my home office today, just because I'm a
Yeah.
little under the weather. But I have a physical office, and sadly, I'm the only one there other than the receptionist most of the time.
Same here. I don't think there's anybody in the office in our office today. And our office used to have like a dozen people. Nobody wants to kind of work from the office anymore. Everybody's comfortable. There's all these new programs and stuff that everyone's developed so that even our firm, so that we could track all the work. And so everybody just, good or for bad, I don't know. We'll find out in the next 5, 10 years. Everybody's kind of working from home.
I don't
But
know. I don't get it. I'm the type of person, I need to get out and
yeah,
start my day and
yeah,
see sunlight and see people. And,
yeah.
there's only so much I can stare into a computer, which is another reason I got involved in real estate, because it forces you to get out there and show homes and meet people in their homes. And that's still the case.
I hear you, man. I hear you. So I want to now kind of shift gears again, and kind of hopefully talk about what's going on in the market. And I really I'm looking forward to having this conversation with you because, as you said, you're going through this fourth or fifth cycle. Started off in '94. You're on both sides, right? And I feel like there's a lot of people that I speak to unfortunately, who don't even understand what happened in 2008 correctly. So when they see what's happening now, it's all doom and gloom. Everything's on fire. Run for the hills. And I'm not a doom and gloom guy. I feel like there's a lot of repetition in history. There might be minor changes, even bigger changes, but it's not like it's something that is completely brand new. So I want to kind of start off by just understanding your perspective on what's happened in the last year, and is it different or similar to things that have happened in the past? I know in 2008 we had a bubble, we had, or at least globally, and I'm talking about macro global kind of economics here. 2008 was a bit of a hard time, as well as in the early 2000s with the dot-com. Is this something similar to that? Is this something different? Like, what's your perspective on all of that?
Yeah, I'd say it's quite different. This what we're seeing today is a result more so of a post-pandemic result. Um, let's if we can go back to 2008, like you said, yeah, it was originating from what we call a meltdown in the U.S. Subprime crisis. Banks or mortgage brokers rather, were extremely lenient in their banks had extremely lenient lending programs, which means that I think they used to call them ninja loans: no income, no job, heartbeat, you're
Yeah.
approved, bam,
Yeah.
100% finance, 5%, whatever you need. If you can fog a mirror, you're getting approved. And we what we know now is, as a result of that, a lot of borrowers didn't have the capacity to continue making the mortgage payments, and we had a huge number of defaults, which resulted in a price drop. It was thankfully a temporary glitch in the market. I think it was only like a year and a half recovery. And then if we fast forward, if you recall, to mid 2017, I think it was April 15th,
Mm-hmm.
2017,
Mm-hmm.
when we saw another major dip in the GTA, Ontario, when the Fair Housing Act was announced. So you could literally buy a property in January, February of 2017, but if you had to sell your existing property and you waited until past April 15th, when the Fair Housing, and by the way, the stress test came into effect.
Mm-hmm.
For those of listeners who don't know, I'm sure that the stress test, that's basically the qualifying rate. So if the overnight lending prime rate was, 2.5%, 2.95 at the time, the benchmark rate would be 2% points higher than that. So you'd have to qualify based on, say, 4.95 or 5.45%, and on a 25-year amortization. So that caused a lot of problems for people that purchased pre-April 2017, and waited to list their own properties, or they had a longer closing and the appraisals weren't coming in and they couldn't close, or they couldn't sell their homes for the values that they anticipated. It caused a big bubble, I would say, anywhere from 20 to 30% across the board, and that took us probably until, I would say, late 2018, mid 2019 to recover. And then, of course, the pandemic started on or about January, February of 2020, and that just put a whole halt on everything. People were just so confused what to do, and I think I call it the cuckoo syndrome, because you're so cooped up at home. Everything is shut down. Everything is closed. Real estate being a necessity, like groceries and vehicle purchases. I think people, for lack of a better word, used the purchase of real estate and the scarcity factor as entertainment. And I'm not even going to mention the egoic part of things, because if your neighbor can afford, there was a joke in the city, in areas like Forest Hill and South GTA, where a neighbor would brag how much more they would overpay than their neighbor,
Oh man.
and use that as a brand. Oh, you paid 1.5 for that property? Oh, that's nothing. I paid 2.2. And
Oh man.
and just because you can, that's I think nobody talks about this. I think there's a bit of a psychological factor affecting these prices. And now what we're seeing, of course, is a retraction of that as a result primarily of the overnight rate just jumping. I've honestly lost track of how many
Yeah.
jumps we've had. We went from mid 1% 5-year fixed money to mid fives,
Yeah.
400 basis point in increases in the last year. And sure, that left a lot of people unable to qualify for mortgages. So we're having a heck of a time qualifying people right now for mortgages as a result of that. There's only so much income uh, to be able to afford to qualify at today's home prices
Yeah.
versus what they were even the pandemic. It's ridiculous. Even now, after the blip, Paris, like our prices are still higher than they were after this dip than before the height of 2016
Oh wow.
increase.
Yeah. I mean, I found it like just insane. I know 2017, and I was being a lawyer, I guess more on the conservative end, if anything, or calculated risks, I'd like to say. I was nervous because people were going in without conditions. And I would always tell people, hey, listen, you need to have conditions. This is not a chocolate bar, right? And so, like, you can't just toss it out,
Absolutely.
get something else. But then when the pandemic happened, not only are people not going in without conditions, they're doing firm offers, but it's a blind bid over the listing. The listings were kind of, I would argue, artificially low just so that you don't have any information on what the seller wants. And at the same time, you're also, people aren't looking at the properties themselves. They're looking at pictures, which are somewhat of a representation of the property. But I mean, everybody knows that you always wear a suit to your meetings to make a good first impression. Those pictures may not be 100% what the property looks like in person, which is natural. And so they're not even looking at it, and they're just throwing in bids just to get something, which I thought was, it was like what you're describing, cuckoo. It was like what is going on? This is not a video game that you're just kind of cooped up and playing to see what you can grab, because this is actually real money. It's not monopoly money.
It's financial suicide, and
Yeah.
for lack of a better term. As a realtor and mortgage broker, I would never suggest anybody go firm unless one of two things: unless they have all cash, or we had an ironclad pre-approval, or the client was okay with an alternative lending format, such as I don't want to, for brevity of time, don't want to get too technical in terms of B market and private lending, but that just
Yeah.
opens up a whole other can of fish for
Yeah.
borrowers. Like to give you an example, right now I'm working with a borrower that purchased a $5 million property. He's a real estate investor, and he requires a $3.5 million mortgage. Now, just to put things in perspective, do you know the type of income is required to qualify for a $3.5 million mortgage? Probably $1 million a year. That's less than probably 1% of the entire population. Very, very few people
Mm.
show that
Yeah.
income on paper. So therefore, the B world opened up their doors, and they say, okay, if you're self-employed, and fortunately, this particular borrower is self-employed. He owns two successful businesses. One is an auto mechanic shop where they do like high-end vehicles. I think they call
Hmm.
it bubble wrapping, and they do certain services. And the second part of the business is they export vehicles from here overseas to Europe, to other parts of the
Okay.
world. And In this case, the banking statements are extremely healthy looking. And the lender would say, sure, based on these financials, based on these banking statements, this borrower would sustain the monthly payment on a $3.5 million mortgage. So that's what we're starting to see more and more right now, that type of lending.
Yeah, again, that's a good conversation for another podcast with the
Sure.
different types of lenders, because every lender is not the same. Every dollar of income that a client brings in is not the same, and you know better than I do. So things are changing. What do you think? What are the changes that we should expect in 2023, or should we kind of see the same stuff? Would you say, and I'm praying you say yes, but do you say the Bank of Canada is kind of not going to raise rates anymore, or do you think they're still going to keep going? I know that some people, based on what the Bank of Canada said, feel like, hey, they're not going to raise it anymore, but I don't feel they never really said we're not going to raise it anymore. They're going to say, okay, let's see what happens, but we're open to it if inflation's out of control. What's your kind of perspective on, firstly, what 2023 has to offer? And if you're, for example, an investor, what should be the steps you should be taking to prepare yourself for 2023?
Well, so just to clarify, I don't only work with investors. I work mainly with home buyers and home sellers. Mm-hmm. Sure, some of my book are real estate investors, but I would answer your question like this. I would say it depends on what is the reason, and this is why I like to meet people in purpose. I need in face to face, is to figure out and delve deeper as for the purpose of why they're initiating this buy or sell transaction. Is it a lifestyle change? Do they need to sell, or do they want to sell? Do they want to change their lifestyle? Is it because you can now work globally? Do you want to relocate to a cheaper province? And by the way, last year alone, I sold 5 family homes for specifically that reason. People cashed in on their GTA homes and they moved to other cheaper parts of Canada to cash in their mortgages, right? So I would say to someone like that, not to stress with what we can't control, but deal with what we have in front of us. So to answer your question the best I can, and of course, none of us have a crystal ball, what I personally see is more of the same. I don't see rates continuing going up, up, up. I do see them flatlining eventually. Is it possible we may see another increase? Sure. But I think we're just going to flatline somewhere soon. The good news is, and here's some relief, we're already starting to see some lenders offer larger, or we're talking about larger amortization periods, going from 30 back to 35, possibly even 40, maybe even increasing the qualifying ratios. They call them TDSR, GDSR, from the current ones to higher. And also the lenders are now starting to reintroduce rental income offset ratios. So let's say you have an existing property and you want to buy a second one as an investment, or rent out the existing. You could now offset that rental income against principal, interest, and tax, versus taking the rental income and adding it to your income. It just helps the borrower qualify easier, even with the higher rate, versus not having that rental offset at a lower rate. So,
so what's the benefit of that? Sorry, I
Sure.
kind of understand it completely, but not all of it. So when you're saying offset instead of income, does your affordability go up because if you put the rent in your income, you also have to take out the taxes, and this way you're kind of offsetting the entire amount? Is that where it benefits?
Yeah, basically what you're doing is you are manipulating the debt service ratio
Yeah.
in a way that allows you, it's the difference of qualifying versus not qualifying, just by being able to manipulate the way you offset the rental income versus adding it to personal income.
Mm-hmm.
It's if we have more time, I would or perhaps on the next podcast we can do a screen share and I can show you the difference it makes, and I can tell your audience that there is hope ahead despite the rising interest rates or even them not dropping, that there are programs coming into place to help borrowers qualify even at these higher rates. It's just we have to adjust, and it's like this is the new normal, right? It's like
Yeah.
remember when the gas kept going up, the price of groceries kept going up, and everybody's like, "What the hell? When is this going to stop?" Well, unfortunately, it hasn't. I don't see things going back anytime soon. To well, never mind food and gas. Look at the cost of goods. Look at
Yeah.
the I don't know the last time you needed to paint your home. Painters, a labor trade, are charging more than most doctors and lawyers that I know.
Yeah. Yeah.
Right? There's something wrong here,
Yeah.
and only because they can, because a lot of the labor is still sitting on government subsidy, or maybe just got numbed out from the last 2 years. I don't know.
Yeah. No, I mean, I find it like just the pricing stuff's kind of gone out of control. I remember when gas crossed 99 cents, and not every gas station had that third digit, so they'd like put up a one on there and everybody's like, "Oh my God." And now I'm so thankful, like the other day they're like gas has gone down to like 130. It's the lowest it's been in a year. Cuz
That's
and
right.
that's like 80 cents from its peak. So it's like these things
That's
aren't going to
crazy.
go back.
No, no. And if you're a Costco member, you'll save another 5 cents on the dollar
Yeah, so it's and even then it's like I mean
Yes.
and all those things add up, but it's still very expensive. My thing then is I guess for home buyers, this is my kind of opinion, and let me know how you feel. I feel like right now, even though we're going through an expensive period. I also don't think it's a bad time to buy real estate. The reason being, you can go in and you can put in conditions. You can put in a condition for financing, home inspection. It can actually look at what you're buying. That's one thing. Second thing, I think there's a lot of opportunities to take advantage of as well. There's a lot of houses out there that, for example, like you just said, do people need to sell? Do they have to sell? I think there's a lot of have to sells out there, and you can go in, and if you're intelligent, you have to take advantage of that, and you can't do that overnight. So I always tell anybody who's asking me, like, hey, listen, go reach out to get your financing in order, right? If you're listening to this, and you want to reach out to Leo, depending on where you're listening, his contact information is below on the side. But reach out to mortgage brokers, get your financing down, and at least you know how much you can and cannot afford, and then go out and search, because you're gonna find some good opportunities, but you have to be in a situation to take advantage of those good opportunities.
Yeah, that's well put. And also, Harris, it depends on the geographic location they're looking at. There are still, despite the good deals out there, a shortage
Mm-hmm.
of inventory in a good part of the GTA. You'd almost have to go a little bit on the outskirts, like maybe Simcoe region, maybe
Yeah.
just outside the GTA to find that abundance of real estate. And I can tell you, some areas there is an abundance of listings. Other areas are famine.
Yeah. And I
Like
feel like
I have,
that's well, I feel like that's also just a normal market too. Sometimes in some areas, I mean, when I know it's easy to write an article, when we read these articles, they say real estate is going up or it's going down, but it's different areas, different neighborhoods have different demographics to it, different economic socio factors that are affecting it, so they're naturally going to be different. So it's always important to kind of look at everything before you kind of go for that and make that decision. But you know what? Thank you for coming on the podcast. Really appreciate the insight. Again, if anybody wants to reach out to Leo, depending on where you're listening from or you're watching from, I'm going to have his contact information on the side or below. Reach out. Leo, thanks for coming on. Any last words before we sign off?
Just wishing you and your family happy holidays. Stay warm out there. The snow's about to hit, and try to get some rest. I think we're in for a busy 2023.
Awesome. Perfect. Happy holidays, everyone. Thank you. Bye.
Thank you for having me, Harris.